What's happening, guys? Another Sunday scan coming at you this time for the 13th and the week ahead. We're heading right into the holidays. We've got another this week and then the following week, and we'll be there. But, this week's going to be a little bit different for me. My plan is to kind of be ready and do the same thing as usual, but at least be prepared to kind of take over in the house if I need to, 11 a.m., noon, etc. Just because, as I had feared, ended up testing positive for COVID, and obviously gave it to my wife and probably my kids too. So personally, I don't care about me. It's just more the extended family and people that we end up passing it to. Obviously not anymore. We've been isolating, but just in those couple days. So that's really my main fear. The other part that kind of sucks, my daughter's out of school. She was going to be the star of the week this week, so that part's a little bit sad to kind of see because she was super excited about it. But not obviously they're going to make her the star of the week the following week, which basically allows them to bring in something for show and tell. But it sucks, and it is what it is. But I will say that my neighbor, who I had not seen, also got it, was not vaxxed, and literally had it, like what you read about and kind of what you fear. It was terrible. I got vaxxed, and my wife and everybody that kind of is around us, and so far, knock on wood, it's been relatively mild. So I'm not here to make a pro stance one way or the other, but just an FYI. That's been my experience. Hopefully it stays that way. Hopefully my splitting headache that I woke up with yesterday was really the end of it, and hopefully it's looking up from here. So anyway, let's get right into stuff for next week. Couple quick topics before getting into the scan. Less size is, in my opinion, better. There's a lot of different trades right now. And last week there was probably, 4, 5, 6, 7 trades that all did the same thing. If you are too aggressive on one, it's not the one that does the full day fades. Probably 4 out of 5 out of 6 or 7 of those are going to do the full day fades. But if you decide to go too heavy on the one that doesn't, the most obvious one, the one that everybody knows or is thinking is going to do that, then you're not spreading your risk, and you're probably too concentrated. So one of the things that I talked about last week, and one of the things that I talked about each day last week in the morning on the broadcast was, don't be so aggressive. Think big picture. There's so much range right now. These stocks that are $2 going to $7, or $5 going to $25, and then fading $8 per share. You don't need to be all in. You don't need to be super aggressive. And in fact, if you're too big, when it starts to swipe one way or the other, then there's a good chance that you're too timid, and you end up making choices that you wouldn't because you're emotionally connected to the trade. So that's one thing to kind of think about. That really helped me because I was able to literally trade all those trades last week, including I already missed them. I already forget them. ENSC, CNTX, EFOY, ISIG. Those were all like really, and even IINN. And, I had okay size, but it wasn't something where I was just like pedal to the metal and like, let's go, let's scale in and crush this trade. But what that allowed me to do is let that trade work. And instead of looking for maybe, 30 cents, 50 cents, or $1 per share, I was able to let those things work all day. And even though there was a couple little blips throughout the day, the point A to Z, there's a lot of fluctuations in between, but I got there because I was not emotionally connected. So the other thing I wanted to talk about was anticipation kills, right? So if you're going to anticipate a trade and kind of size in, anticipating that it has to crack at a particular level, more often than not lately, everybody's already on the same page. Everybody already has the same idea as you. And if it doesn't, you need to be the first one to size down. Otherwise, your risk is probably the highest because you've got too much and you didn't size down when you had the chance. So AVCT comes to mind. I was going to go over that in a little bit more detail. I'll probably save it along with a couple other ones that have been working really well lately. and do a little bit of maybe not necessarily a recap, but maybe it's next weekend, or maybe just a video in between, just to kind of go over it, just so that I can do this video and move along, just because I'm trying to keep it short and sweet. Next thing was stop being the guinea pig. And listen to yourself. Be honest with yourself. So I gave this example. There was a member in my room, and he's trading this stock that was pretty much in a channel, and he's like, "Oh, this thing's so exhausting," and like I'm getting tired of like trading this thing, or man, which way is it gonna go? And then he takes a trade. You have to listen to yourself, and verbalize it too out loud. Write it, like think about it, and when you say it, when you write it, when you talk about it, like listen to what you're saying. It's exhausting me. Which way is it going to go? Forget about it. Let it tell you which way it's going to go. Let it tell you that it's going to break down. Let it tell you that it's going to break and then trap. Because if you anticipate it and you're wrong, you're just going to keep on getting trapped. And the point here is that there is so much range in this market. That little consolidation spot, that channel, yeah, it would be nice to have a great average and a bunch of size. But if you're wrong, that was avoidable. You can always wait for it to break down or break out and then join that trend, because in this market, that breakdown is big, that breakout is big, and it continues to go. So you don't have to worry about what if I miss the trade. And that's where I think a lot of people are getting in trouble in this current market, because it's pretty trader friendly out there right now. There has been some traps here and there, but only, in my opinion, if you're anticipating and trying to force the trade with too much size. If you're respecting trends and respecting the trade and the kind of how the market is currently working on that particular day, if we're unwinding, then yeah, there's a good chance that things are not going to break out and they're going to probably fade. If we're straight up, you shouldn't be fighting stuff. So anyway, those are my thoughts, and then we'll get right into scan. All right, guys. So once again, like I said, it's short and sweet this week, and maybe next week as well. First and foremost, BTO. You've got the free t-shirt. I'll get back to giving away the scans and the icon meals and all that other good stuff once I have a little bit less on my plate. But just a reminder, not a financial advisor. None of this is buy or sell recommendations. This is for educational and informational purposes only. So if you're not okay with that, shut this thing off. If you're okay with that, great. Let's continue and talk about the week ahead. So one of the biggest things I think right now about scans, and kind of coming prepared and knowing what you potentially want to trade is great, but a lot of times they're taking a back seat until maybe 9:45, 10 a.m. or later on in the week. It's good to know what's moving, what has range, what a particular sector or theme looks like, what's setting up, what's strong, what's not. But as far as saying, okay, this is the one I'm trading on Monday morning, this is the one I'm trading Tuesday morning, it's not that kind of market right now. So the preparation is more in the understanding where we're at overall versus, one name, focus in, zone in, just like when we had OCGN or something like that. For example, Apple's setting up in a huge way right now. I want to keep an eye on Apple, but it doesn't mean that it's I'm going to over focus or over prepare for it come Monday, but I want to be familiar with where it is in the move. For example, just pull up the daily. We're straight up, and we've just gone from $1.5 trillion to a $3 trillion market cap. I mean, who knows? Maybe we go to 5 trillion. It doesn't really matter. But LCID, we finally got the huge unwind. This has been very trader friendly. I think that you're going to have a nice reactive trade off the open, and then 9:45, 10 a.m. plus, look for some type of trend join. And I think we probably have another day or two of good action, and then it's probably going to tighten up. And whether that's just this steady kind of grind down, which, it's almost like you have to be a swing short on it, or if it starts to rebound, that's probably going to depend on, what RIVN and F and Tesla and all these other types of EV names do. But so far, this one's been pretty weak while, F is breaking out. So, they're not always connected at the hip. But a lot of times when the sector starts to go, this one has strength, the other ones have strength, but this one's kind of disconnected, and it's been super heavy since the SEC subpoena. I think there was some insider selling. Don't quote me on that. Somebody can verify. And then obviously the preferred convertibles and all that stuff. So what I'd like to see is some type of gap up. And, if it comes into this 38 to 38.50 range and then potentially fades off from there, that would be ideal. If it gaps down, we might have that reversal. I just want to be prepared for both sides. I do think that whatever way it does go, I think it's going to go the other way. So if it gaps up big, I think it's going to end up unwinding at some point. If it gaps down, I think it'll end up coming back. But I think we've got another good 1 or 2 days of trades on it to be able to participate. Stitch Fix has been another nice one. This chart just looks terrible. It almost looks like JMIA as well. But same kind of concept where it's a main watch. It's nothing I'm too crazy excited about, but higher the better. And I think that we have a good chance of potentially unwinding as long as 20 does not start to firm up. F. I know a lot of people were thinking that this is pushed up too much too soon and it's got to pull back, but I would encourage you guys to take a step back and look. We've been literally consolidating for a month. So do I think that this move is going to only last 1 day? It's possible in this market for sure. So am I ultra bullish? No, but don't think that just because it had a 10% move, a $2 move, don't think that it has to do anything. Don't think that it has to pull back, because it's literally been in this channel for a month and it finally broke through. So, and we had that gut check. I was thinking we would go to like 1750, 1850, or excuse me, 1750 to 18 on that gut check day. We finally had it, but it only got down to about 1850. Then it came back up, and then now we're, kind of cleared for that breakout. So this could easily just, squeeze out that round of shorts, and then we end up having the backside move. But for now, I do think that any week open, 2080s, 21s will get absorbed and probably rallies back. And we'll take it day by day. The next couple failed follow-throughs. IINN, ENSC, and CNTX. I don't need to go through each one individually. Same concept, but I guess I will. IINN, if you're looking left, look at these levels. Ideally, some type of push towards 440s, recheck in with maybe that 440, 450 level, and then some type of failed follow-through. We've got ENSC, which came back a little bit towards the close, but had trouble. So for this one, I'd like to see another gap up. I feel like shorts are still not whole yet, but they're getting there. So I do think that we could see a low volume kind of push if we got any PR or whatever, but I do think that it's going to be an exit strategy so that, any big push, any big move, any big volume, I think will be the sort of liquidation exit of this move, in which case I'd be looking for maybe that gap filled back down towards the threes, and then over time get a lot lower. And then CNTX was obviously beautiful. You guys saw the trade there from Friday, and nice failed follow through, VWAP seller throughout the day, completely unwound. So continue to go a little bit lower. I'd love to see it kind of push back up. If we're fortunate enough to get it to gap up towards the 550, 570s level, something like that, that would be ideal. But I do think that this will continue to have downward pressure, just like I talked about on the scan for Friday and the broadcast. I feel like it's super, super retail crowded. And it was just a situation where, we had a lot of shorts on the wrong side, but we also had a lot of retail, getting let out of a very bad long. A lot of people were probably stuck from this day, and they got bailed out. So that gives you, I think we just put a video out, and I had gone over it on another video recently, but that was one of the 4 sellers that you have in the morning. you got these back holders getting out, so you've got that extra pressure. You've not only do you have regular just scalp sellers, you've got paper sellers, you've got back hold sellers, and then you've got shorts. So you had all of that going for you, and the fact that every rebound failed, that's why we ended up, in such a bad spot on Friday. MTTR, this one's been beautiful since the blow-off day. I still think this is super retail crowded. CNBC's been all over it every single time, and they had a great call. Don't get me wrong. They pushed it up over here, pushed it up, and at that point, it's just like JMIA. If you guys remember, JMIA was on CNBC literally like every single day, and then they don't talk about it, and then this happens. So MTTR is kind of on that backside of the cycle, and I'm thinking that it might want to recheck in with 20. Then ISIG, this was great. Last 2 days, Thursday, I just went in with a smaller amount of size, let it do its thing, and ended up fading nicely. And then ISIG on Friday, shorted. There was a newsletter involved, and you can kind of see the goalie setup that we talk about all the time. And we got that perfect goalie kind of pull and exit, no bids to be found, and I just let it work until the end of the day. And this is one of those ones I was talking about where, if you're too oversized, then maybe you get chopped out. Maybe you get chopped out over here. But if you're focused on letting the trade work, let a little bit less size, you actually make a lot more. Then last but not least, let's shift over to the continuation side. EFOI, I had on failed follow through. I do think that there's a good chance that it continues to fail to follow through. But what interested me was the fact that the buyer 306 was the low, 316 was the low, 321 was the low. So somebody's been soaking it up, on the dip. So I want to keep that in mind, that if it does not break under that 310 level, don't fight this thing. So I have it on continuation because it had 200 million shares, and then now it's got small. It could go. It's not a high conviction trade, but if it bases and does not want to peak at that 310 level, be cautious on the short side. Yes, I like it as a failed follow through, but I'm taking into account the fact that it is being absorbed, and if so, then we could have that secondary move. SGMA, this one actually lower the better. I currently have some left, probably about 15% of my position or so. I sold some into the parabolic move at the close. I sold some into the 17s. I sold some into the 1840s after hours while I was in line waiting for my PCR test. So my goal was to just let it work. A lot of people ask me, why was I confident, whatever. If you guys remember, I had this swing over here this other day, so I was familiar with it. I immediately remembered that I had 3 million float. Saw the abnormal volume, had the earnings report, just felt like there was a player in there. So it was more of a case of size in, take an entry rather to be participating. And if it continues to go, then just scale into the winner, scale into the winner, scale into the winner. And there was a couple points there during the day where, it should have died, came back. Should have died, came back. Should have died, came back. And shorts just got smoked. So ideally, I get to replace some of those 1840s lower. If it opens over 20s, then I'll be selling, the rest of the gapper. But I'd love to see it come back down to reality a little bit, flush out, and give another opportunity to kind of replace some of those sells. ABCT. This one, I'm not too crazy biased, but they did the 424 filing after hours. It's only like 6, if I was to average it up, 6.7 million shares or something like that. So compared to 300 million shares, it's a drop in the bucket. So if people were positioned anticipating that, expecting it to crash on that, then they're probably stuck. If they're not, then then we're probably going to unwind. So I would expect that if it does not crack and top at 220s and it starts to base at 220s, I could see another push. And I'd like to see that and be aware and cautious of that. Let them squeeze everybody out over that 265 to 3 range that we talked about in the room, and then start to look for the failed follow through. So I don't want to be kind of figuring it out on my own. I'd rather be there after whatever happens. PTPI, this one is just another one of those where, you know, I've been swinging this for a while, around a core. Traded it pretty poorly because I couldn't sell it pre 7 a.m. at E-Trade. So there was a couple times where it was a banner trade, and you know, then it ends up being like 250 or 3 by 7 a.m. and it you know, it is what it is. But you know, higher. I do think that if dips get soaked, it can go higher. It should have died like, you know, 20 times, I feel like. So there's something about this one where they keep on coming in, but I would not expect anything until 350s. You know, 350s confirmed. IDRA so far, buyer on the tape. There was a patent the other day. And hopefully it continues on. If it doesn't, it doesn't. But I have a good average, just letting it work. I never sold it. And, you know, we'll just see. I try to let these winners work if they do. If they are holding on, just in case they turn into something like this VYNE, for example, which, you know, took off, consolidated for a few days, and then went, you know, 50 or 100%. Which this candle interests me. If next week we start to kind of base, I think that we can have a nice secondary move there. If 150 stays as the base, you can see it's been a little bit of an issue on the daily chart. Right over here, if you look left, just draw a line. It's been an issue. And each time it peaks, it peaks, it peaks, and then it closed under that level. So if this starts to base at 150s, then we have a chance for a potential breakout. So anyway, that's it. That's what I'm prepared for. Like I said, every Monday, every morning, really, it's just about looking at the gappers, looking at the opportunities. Select 2 or 3, focus there, and then use these as those secondary watches for when things start to slow down. Is this proving you right? Is this, you know, short that you were looking for doing what you thought? Then why not join? Is this long doing what you thought? Then why not join? I look to be proven right on my ideas, and if so, then I go for them. If not, then I avoid them. So that's it. I'm going to take it easy this week. Like I said, thanks guys for watching. As always, leave a like, leave your key takeaway, and we'll catch you guys in the room.